Hey, everybody. Good morning, America. Good afternoon, Europe. Another not on time stream today, unless you're American, I guess, as it's quite late in the day, European time. But I'll try to go through a few things here. In light of the crazy developments that keep occurring in the news, geopolitically, but also for the Bitcoin space. Not sure if it's going to be streaming on Twitter. They said my streaming platform says there are issues, but hopefully it'll work on Twitter as well. Good old power curve. Not much changed. Still down here in the lower quantiles, 5% range. All right. 62,000 is the bottom range in dollar terms. Pretty wild. And that's where we are. So if you loved Bitcoin at 130, 126, 128, whatever it was, do you hate it now? Hello, Kevin. Thank you. Glad YouTube is on. Good morning, Franklin. That's a Twitter view there, so it looks like Twitter's working. Great prices, guys. Great prices. Four-year cycles intact. I'm happy for us to break out of it to the upside. Remember, APSK was joking about this time last year that, not this time last year, let's say 6 months ago, that we didn't, you didn't tell us that our models would break to the downside. But it's, yeah, without the fanfare of a boom late last year, but still a slide. So nothing out of the ordinary. And Wall Street is certainly more involved. This is the fun one. I'm going to review it, I think, a lot. All right, now that I have it every day, basically. But the projection of where Bitcoin's price would be today relative to this trend. All right, so this is the power trend at the time, the green line. This would be the projection today, February 17th. All right. So 2017, $148,000 Bitcoin. That's when Bitcoin was. Sorry, did I just say February? December 2017. Peak mid-December. 150K was projected today. June 2019 pump, 166K projected today. And then 2021, two tops, about 150 the first top, 170 the second top. So we do come down. All right, and of course we're below trend, but it's 129.6, I think is the exact number. I'm gonna zoom in. These zooms are a little bit different on this. I still can't get into the 17. They should match. Did I not pull it in? Maybe I only have yesterday's data. Doesn't really matter. $129.3 is the trend and the projection. But The wild thing is that is not the lowest. All right, this is our record low. So this period right here, mid-May, 122. Why am I losing it? Thought it was lower than that. 122.8. I just did this yesterday. I'm already forgetting. 122.7. 122.7. I think it's the 19th. Again, every day matters here. 122.7. 122.7. Right, which is wild. Because back then, Bitcoin was $2,000. And they projected 122,000. That power curve projected. And so we're higher, which is some room for optimism. All right, at 129, we still have $7,000 worth of breathing room to spare to hit an all-time. Say if we ever hit the all-time low, but or let's say and this thing goes up $100 a day. The actual projection, which is the green line. So we'll see. We're definitely pulling it down a lot. The further down we are below this blue line, the further negative the power curve gets. Which is, not as exciting, let's say. But if we go back to this chart, and the quantile is really the best way to go out into the future, not my multiple analysis. I talked about this yesterday, right? A lot of these lines converge right around here, which happens to be the end of the decade. And as I mentioned yesterday, maybe not closer to 600,000 by the end of the decade or start of the next, depending on where you measure it, end of 2030, but closer to 500,000. And yeah, that could be pulled down. It certainly will be pulled down the more that we're under this curve. But, a year ago, 2 years ago, this was closer to 600,000. And I guess I should show a future reference point, so that you'd understand that even better. But the effect would be the same. The lowest prediction is here, May 2017. The highest prediction is obviously crazy back these days. Now that I have a daily, we see that we actually went to the quadrillion values of Bitcoin based on the earliest trends, $349 quadrillion per Bitcoin based on the very earliest trends. Sadly, we're off those trends, but this trend's pretty stable. It's pretty stable, pretty remarkably stable, I'd say, for the past 10 years. Right? And it's not the lowest. So I want to keep coming back to that. Hello, Sandra. It's incredible, isn't it? The memories are just so short. In 2017, the US was not printing money, but the rest of the world was. 2021, everybody was printing money when we had a double top. And 2025, we had a top, and people had been cooling off. Flat to down. This is actually steeper than it really was because it's in dollar terms. Right, so it did go down worldwide, but so many currencies lost value of the dollar, like against the dollar. That's why this is sort of a steeper drop than it was. But regardless, central banks on balance have not been printing in the last 5 years, and Bitcoin went up. So we can't judge it for sure on the money supply. However, if the money supply does skyrocket and meme stock trading goes crazy, there's a chance Bitcoin does that again. And we all know what Trump wants with his new Fed chair, if he ever gets confirmed. Its current price, or projected price by the end of the month. Money supply data has stopped in September. It's going to be a very lagging money supply, but I'm trying to get it as accurate as I can now. As I show you guys, $27 trillion. All right, it's Tuesday. I'm already going to go into some political ones. Also to do with the money supply. Munich Security Conference was last weekend. I watched it intently. So here's NATO military spend, right, per year, and this is an index. So how much did each country increase? This is every NATO country. The orange there is Lithuania, 7.4x. The red is Latvia, 5x up. I'm basing the last year of peace in Europe. All right, so this is before Putin invaded Crimea. That's where one sits on this chart. So you guys know why I talk about it all the time. 7x more in military spending for Lithuania, Latvia, 7 and 5. Just want to read a couple more for you. Poland, 4.1x more. Romania, 3.5. Slovakia, 2.9. Czechia, or the Czech Republic, I guess we're calling it Czechia now, 3.04 times more. Albania, 3x. Bulgaria, 2.87. Where's Estonia? 3x. From an already pretty high base of Estonia, to be fair. And then where's Finland? Finland also from a pretty high base, stable base, 1.68. And America, 47% more per year, which is obviously a huge base. Britain, interesting, only 28% more, although they're huge supporters of Ukraine. And it's interesting, though. It's even less than Spain's increase. Spain's 43% more in military spending in 2024 than they were in 2013. So I just thought that was an interesting little thing. Again, you guys will get access to all this type of stuff. I want to sort of harmonize some economic stuff, some Bitcoin stuff, some trends, money supply, military spending. This is the U.S. $1 trillion budget or spend actually for 2024. 2025 numbers are not in yet. The two greens are NATO's, so this is pre-1999 non-U.S. 400 billion, and then my country, Latvia, and many other small countries, including Poland, only 90 billion. So even though we ride pretty high on this index, right, especially in the last 10 years, recognizing the threat, we're pretty low. Russia's more, and Russia's even more than this. They hide things in their budget, 150 billion. China, 300 billion. And Ukrainians, heroes, unbelievable, from 7 billion taking on the supposed second army in the world. Now it's 65 billion, which obviously it's even more than that now. Hold on. So this Kabuki theater is continuing. Trump is going to continue to try to get Ukraine to heal and give up its unbelievably fortified territories in the Donbass. They're not going to do it. But Trump's golfing buddy, Steve Witkoff, wants to do a deal. Trump wants to do a deal. They do these peace talks, and I'm just looking at the trends, wondering when Putin's going to stop putting meat waves to Ukraine or Iranian-designed drones now produced in Russia. A 30-day average is 890 a night. Been a little bit light past couple days, although last night not, I guess. But I haven't done all the research since there are some talks going, but yeah. German Ministry of Defense said they want to get up to 2,000 daily drones. Remember a year ago, Trump claimed on his high of being elected that the U.S. had given $300–400 billion to Ukraine. They maxed out at about 115 billion euros. Haven't done anything in a year. So Europe's paid 2/3 of the cost and has close to 200 billion committed on top of this. 90 billion from the aid package and other packages from other countries, which is pretty wild. Overall, it's cost Russia nearly 11 soldiers per square kilometer at the moment to hold what they have. And then if you want to see that in percent terms, it's a little bit wilder. Right, when they started, they had about 7–8%, which is Crimea and the occupied Donbass that they had since 2014. Right, that's when they started the full scale, which is about to reach 4 years. Got up to 27–28%. And by the time of the Ukrainian counteroffensive, where Russia was so unorganized, second most powerful army in the world, they got down to only 17%. So on net, they increased 10 percentage points in 2022. Really nothing in 2023. 2024 and 25, they started to get about 1% a year. So now some people have slightly different numbers, but this is roughly about 19.6% of the country. And for every percentage point, there's your casualties, 63,000 dead, killed, or captured. It's brutal. Yesterday was Lithuania's independence. This was not from Soviets actually. This happened in January 1991. I talked about it a lot, where Lithuanians suffered the most. In Latvia, we had 5 people die, but Lithuania had 25 or 30. Darth Putin always has some good takes, but this was actually their original independence in 1918, even though the Lithuanian state's way older than that. Then I just wanted to show you guys this as well. For all of the idiocracy that is out there uh, defending Russian dictatorships. These Romanian fools tried to, maybe they were paid, maybe not, but regardless, if someone gets a hold of you in Russia, regardless of if you were paid or not, to film some propaganda, it's usually not going to be a happy occurrence. The link is here. This is a good open source researcher, Cloud. And yeah, clear by the day for us, but Ukrainians keep paying. It's wild. So we're going to be in a period, regardless, of more military spending. The U.S.'s ICE budget is, there's a good expose on Homeland Security, which always was an Orwellian name, I thought, which the Bush admin started after 9/11. Good expose on that on John Oliver on HBO the other night. But the ICE budget is the size of Canada's defense budget. Americans are going to have to figure it out. But I think Europeans should jettison most of the threats. Really, the only thing Americans seem to offer Ukrainians are intelligence, which it's enough to keep the Ukrainians close and taking the humiliation day by day from the Trump administration. But it's amazing to me that the land of the free is trying to bring a people to heel that are actually fighting a country with, no property rights, no sovereign courts, no freedom. I don't know if you guys saw the news that Poland might try to go nuclear, which is perfectly rational now that the United States is more or less showing what everybody sort of knew, is that they're retreating from the European theater and really preparing for what might happen here in the Asian theater. Yeah, South Korea makes some good kit though, don't they? I guess China's not happy with Japan's rearming. It's wild to think where this chart could be even 10 years from now. This rearmament of America is the Middle East. It's a war that's not even being a theater that's not even being addressed right now. And it's crazy to think that North Koreans have been fighting on European soil. It's just nuts. Mm. Sarah Payne is really smart. She's really enjoyable to listen to. Very good analyst on Russia and China. What was the podcast? I'll check it out or link it. Speaking of links, back to um, good implementations of the power law. My Ukrainian friend, who goes by Pan B, not Plan B, but Pan B, put this together, and it is amazing. I mean, I encourage all you guys, whether it's you know ChatGPT or Claude or whatever, you can do so much on your own now. Although I do plan in having sort of a unified chart setup where you can do a lot of things. But this is a nice log chart with the what are these dotted lines actually? Are they? I'm not even sure. But you can do very cool things. I guess it's just picking 4-year cycles. No, it wouldn't be 4-year because this is log. But I wonder, since this is 2027, right, was what Stephen Perrineau said is possible, we could see another bull. And if you predict these equidistant on log tops, you could get something like that. But yeah, I can put the link in the chat for people if you are interested. It's a very good one. No worries. Yeah, she's been on some really good shows. There's this Dwarkesh. What's his name? I'll find it. Dwarkesh Patel. I watched a bunch that he had with her on. Is very good. Yeah, so this is the cycles. Is this in log time? I wonder. I gotta ask him about that. Whoops. But it's very cool. You can do a lot. Yeah. Dwarkesh Patel. She's kind of funny. I saw her on this this other guy, Pyotr Korzin. He does some geopolitical stuff. She doesn't. I mean, Pyotr seems fine, but he was maybe trying to like sort of hypothesize about different things with that Putin might want to be doing, and she's very very blunt and to the point in her, at least in her live discussions that I've noticed. But yeah, it's good we have the trends. And since we're so low in these bands, you know, if there is sort of another global shock, although I really don't know what could be more of a global shock than what's already been happening. And you see here that it certainly can. Price can explode when the monetary base explodes. As far as protecting yourself in the geopolitical climate. To me, it just seems, you know, going back to your earlier comment, Sandro, it seems as good a time as any to DCA in, to be more proactive in establishing a Bitcoin stash. The only thing I can think of that could extend this is if, you know, the grift that's happening so much in the US right now, like Trump with his shitcoin, Trump with, you know, it's been well documented that World Liberty Financial is receiving payments, donations, I don't know, purchases of this coin well outside the purview of anything that was defined in the emoluments clauses of the Constitution. If the Democrats do take power, you know, and we had, you know, if this was the over-levered DeFi moment, right, the worst of the worst, we set in this low, you know, and the Democrats do take power at the end of this year, maybe there could be something where we really push this down even further, like next year. And it's not, it's not SBF that causes this fallout, but even the Trump family themselves. Again, it's not a prediction, but and I don't think it's going to be Carter's prediction that quantum is going to be the threat to ruin us. Okay, thanks. I'll just search for the. Yeah, with my software, I can't directly copy the links, which is so stupid, but I'll find it. I'll put it in the notes after or attach it to a tweet. Thanks. Hello, sir. My coefficients are here also. It should be similar on my site, although I have to admit that on my site it's the manual calculation. Here it's slightly different, but I'll check. I got 5.77 on the slope, or the scale factor, and the intercept is very small, 1.6 to the negative 17 decimals. Let me check my site just to double check that, because it is slightly different. The underlying math should be the same. Yeah, it's the same. 1.6 and 5.7, yeah. It just depends. Probably, I think, and let's see even if Pan B uses or shows his. Yeah, he's got 5.7, and he's got negative 1.65, which is very, very similar. But probably the reason would be, I've tried to go back to Bitcoin Pizza Day, and there has been some extrapolating, but this is the thinnest data that I have right here. And you can see that a couple are pretty flat. It's just me extrapolating through. Like there are some points where I had it, some where I didn't. And this is just extremely thin data. This is Laszlo's purchase of 10,000 bitcoins for 2 pizzas, which is like less than a cent. But I'm rounding to 0.0 on the chart. So it's probably that generally. Speaking of Carter, most of the data that I use, just try to use general data that a lot of people can use, is coin metrics from like maybe from here. I don't know exactly when I switched over. So if you're generally using coin metrics data, it should be close. But even they, a lot of people stop or have different data around these times, like 2010, 2011. So that should be the reason. But yeah, the fun part is this: is that we can find this proportional increase in time to double, which if you run the math on those coefficients, it's around 12.9%, 12.8%. Actually, between 12.7 and 12.8% is the better number. So that's an increasing in time to double. And right now we're at about, we're in this epoch, which is 711 days to double. Which is 2 years, roughly. All right. It doesn't matter the points that you pick, but I start on Bitcoin Pizza Day, so. So my sort of next date on this table is only a month from now. And obviously we're quite under the power trend. But when you look at it here, or when better when you go here, it's just so, it's so strong to me. It's really hard to unsee it, this chart. And again, a lot of people are worried about the, I gotta take off log because the tooltip never works on log, but a lot of people think whatever, this time is different. But you just go back to this chart and we've had ups and downs of where today's price would be projected. But from, mid 2016, it's been pretty consistent. And that translates, by the way, back into your coefficient question, right around 5.8, 5.77, whatever it might be. So if you plotted the coefficient, the slope with a scale factor, because it's not really the slope in a power curve, but that's what the stats software calls it. If you plot the slope, it would look roughly like this the whole time, which is, it was not clear earlier on, but once it's settled into this, it's a pretty good looking curve. And even though we're pulling it down, in general, we pull it up. Let me take you back to my old charting software. I didn't show this yesterday, but I talked about showing it. So now I will show it. It's plugged in. Yeah. It's going to be a lot of data. I'll come back to it. Hello, Permaband. Good to see you. I don't know. You know, it's funny. I mean, I don't know. I started here, right about here, posting about it. And obviously, like most I do, it's not to great fanfare, but um, Giovanni started like posted it somewhere here as far as price goes. Just a couple months before me. He did it on Reddit. I did it on Twitter. But Trololo Low, who was a really popular Bitcoin talk writer, he was doing it somewhere like here, but talking about logarithmic curves. It was just the better fitting curve at the time because Bitcoin was like growing really fast here. Catch that like explosive growth. But anyway, it settled into power growth. And I probably started to talk about it with Marty on his show. I'm trying to think, maybe in 2021, or maybe even 2022, because I got this old software running before ChatGPT, so I think it was 2022 when I got it fully running. So that's about how long I've been doing it. And I don't know if it's still the most popular. I think a lot of people don't understand it. So again, this is just so crucial in my view. All right, let's take off all the other stuff. Let's just look. So right now, the trend itself increases $119 a day, $3,500 a month, $10,000 over 3 months, and $37,000 a year, $38,000. And if you go out to the end of this year, we're up to $50,000 a year, or $150 a day. You know, and you and I, everybody watching this knows it's gonna flip back to the trend sometime within the next 2 years. Right? We flipped out of it a lot faster than any of us would have liked, but you know, if you do the math, right here it went out in April, came back in April, I think, right? Yeah. So 2022 spring to 2024 spring. So that translates, obviously, if we're going to do it again like this, even sooner, right? Because we flipped out of it in 2025 October. So maybe it will be 2027 when we get back above it, and then Stephen Perno has this sort of harmonic extension, which is kind of like this in some extent. You keep the equidistant periods, in log, and then you match it up in ways that I haven't experimented with, but sorry, losing my place here. But I'm having a hard time understanding why people don't know that we're getting right back to trend. Like, yeah, it could take 2 years, but we're going to get there. Certainly fighting, catching a lot of falling knives at the moment, no doubt about it, but we'll set a bottom somewhere. You know, it took 2 months here. November 2022 to January 2023. 2 months exactly. Yeah, I need to put your calculation to the miner revenue. That's a good idea. I have it written down. I need to run it. Hello, Chad. Depends on what you mean by epoch. But if you mean a 4-year cycle, I don't know. I mean, we're early. If it's a 4-year cycle, right, we're early. Because usually we'd be coming down from the high from the prior year still. So already busted through it, you know, in October. The high was the trend. And I know people also are worried that, you know, okay, so this looks so much lower, it's going to get lower and lower and lower. Again, I think there's merit to that, but also, like, you just got to look at the math. I mean, it's totally possible that this low that we set here in 2016 May could hold. I need to get the 30, like the 2030 forecast on this chart as well. I'll try to do that by tomorrow. But this 122,000 or 123,000 projection all the way back in 2017 is the lowest we've ever painted. So I take that as a positive sign. Right? All the way from here till today, we've actually been higher. Yeah, we're drifting low. We've been drifting lower and lower and lower since 2021. But we're not at the bottom. And there's nothing to say that we have to hit the bottom. We didn't hit the bottom here in 19 or 2020, and we didn't hit it here. So all I'm saying is, obviously nobody knows the future, but it's not like a guarantee that if you look at this chart on log, I got to get out of this again, sorry. If you look at here and you say, okay, well, we didn't get up to the 8 or the 9, you know, the 80th and 90th percentile here, we're definitely going to keep pulling this thing lower and lower and lower. It's statistically, there's nothing to say that. Statistically, we're at the extreme cheap levels still. Like the 95% of the time, based on the past, price is going to drift higher. And even anyway, right, it drifts higher, right? We go to this chart, we're drifting higher 100 bucks a day. Yeah, I need to break it out like that. I don't have it exactly shown. Yep. Thanks, I got it. Hello, John. Generally, yes. Yeah. This does not project hyper Bitcoinization, which I think also makes sense, right? It's just like gold. Like I'll show you with another triggering asset for people that just to show you that just very rarely does an asset jump to nosebleed levels and then stay there. That's the key. Like, yeah, it can jump to crazy levels, but does it stay there? So generally, the answer to your question is yes, it's capped. Here's gold, for example. Log linear, exponential trends, straight lines all over, not curved lines like Bitcoin. But yeah, we're at record highs for gold relative to the exponential trend, which is 5.4% CAGR per year, which is not that exciting. Remember, the gold bugs, they'll pick $35 an ounce here and then run a CAGR calculation all the way to here, and they'll be like, oh, you're getting like 10% or whatever, but that's not how it works. You got to measure the slope of the black line. And yeah, you can get well above 5% if you bought here. Well, you could also get low if you bought here, so whatever. Point is, even with gold, it's not going to stay here. I'm 99.9% sure it's not going to stay at this line. This is statistically what it says, right? And to get down to the median, you got to drop all the way to here. And yeah, I could spend years or decades above this line, but I just don't see the blow off top. Neither for gold, neither for Bitcoin. It's probably a long-winded answer to your question. Do you give me a second one? Not yet, but this is a very interesting question. I've hypothesized about this a lot, but the growth rate of the curve is 40% right now, so it's better than gold. It's better than anything. So hodling's still good. That's the quick answer. You don't get actually to 10% until outside of this chart into 2070, would you get to 10% per year, which is obviously still a big return. But more interestingly is the question of what happens before then, right? Like, so we get to 1 million on the curve here in 2033. Let's just look at these numbers. So we get to 1 million here in 2033, May, June. And about this time, we're going to start to match, if trends keep, we're going to match the value of gold. Any one central bank balance sheet will also be passed probably by then, if I recall. So like the euro, the dollar, the yen. And by 2040, we'll be bigger than all of them combined. So this, by about 2040, Bitcoin's market cap should be bigger than wherever this thing is projected to go. And it might, in fact, be around 100 trillion, by the way, the mythical $100 trillion number. I can pull up the projections, but the point is, the question marks come there. Like, is this thing going to be captured? Is it going to be like Nick Carter's saying that we need BlackRock to audit the code, which obviously would be a huge failure for Bitcoin. It might be that the asset still goes, but then you have all this fiat interest on top of it. Maybe it turns into exponential. Maybe it matches the broader stock market. There's all sorts of things that could happen. But it is weird, I have to admit, that you'd have an asset that would decline in growth, in another unit per year. It would slightly decline if all the rest of the assets still grow at 10, 15, 20% per year. So that doesn't seem to jive. Something will have to break. And I don't know exactly what that means. Is it hyper Bitcoinization? Is it Bitcoin's taken over? Is it Bitcoin takes over? You know. But this is a very nice sustainable curve. This is a network type power curve. Proportional growth for each 12.8% of its life that it grows, it will double. And that's not a constant thing, which is unlike gold and silver, which are constant and unsustainable. Where the hell did I put that? Here. And even gold is not that amazing. So anyway, that's where I'm going there. Thank you, Tyler. I'm not bringing the aggression today, but I'm glad that you're staying grounded with me. I mean, how are we going to argue against this? I know my date is not correct here; it's frozen in the past, but the date on the bottoms is correct. Anyway, I go out of log because it's still like keep getting it screwed up. We're historically cheap, guys. I mean, $15,000 looks pretty good. And then I can show you the. Let me see if this works. I keep forgetting to put the multiple in, but anyway, this is the more back of the envelope. Not as pretty, but a different way to do it. I still need to do the multiple yourself, but so here we look like we could go a little bit lower, but in reality, this is so far down. Like it's true that silver is as cheap as that 0 percentile, like Bitcoin price in silver. But this measures the ratio over or under the black line at any given time. So now we're in about the 30th percentile. So it's possible if you look at this one, which is just a different way to look at it. So if the trend is 129, right, or whatever it is exactly, today, where's today? 129.5. No, 129.3. Why don't those match? Actually, they should match. Need to look at that. I think I'm a day off. Anyway, it doesn't matter. The trend is 129, low 129s. The actual price here is 68, so we're, what are we, 45% under the trend? That percentage, 45% under trend, is the 30th percentile. Let me just get you my old chart so I can show you the percentages better. So this one shows that perhaps we could go a little bit lower still. Is it this one? But yeah, I mean, I'm super bullish about this stuff, guys. I'll have to look this up. Hello, Michael. Or Mishi. So here is the same thing, but in my old format where I have the multiples, just to be clear, somewhat clear. So yeah, 129.3 is the trend. And at 68,000, we're very close to the 30th percentile, which is, it says here 0.5x, but I think that's like 0.45. It rounds to 0.5. So 50%, obviously 50% discount. Getting to a 70% discount of the trend, or 0.3x the trend, would be extremely rare. Getting to 0.1x is like only happened in the early days. So I don't think it's happening again. Yeah, anyway, it's a different way to look at it, the power trend, but it's probably too pessimistic, actually. Bottom line is this is the more scientific way. It would be the quantile. And we're pretty low here. You can look at the R squared of the lowest. So this is like a pseudo R squared. It's every little quantile has its own R squared. And it's not great. Oh no, it's not terrible. It's 81%. So 81% better than the mean. And it's growing at a 6.5 slope instead of a 5.7. I mean, you guys, if you're watching this, you know what you're doing. And whether you come in at 55, 65, 75, these are great prices compared to last year. Did anybody sell last year? Wouldn't it be wild if it's just a regular 4-year cycle again? I got to get the halvings on here in the timeline. Nice. Congrats. It's never enough, man. It's never enough. I get you. I was also thinking, well, let me get out of log. Like somewhere here that we would have a big pop and then come back down. And so like the start of this year, I was buying some calls. No, not the start of, like, for expiration date around now, February, March, based on where the power curve would be. Because I thought we would be doing one of these things, like popping up toward the end of the year, then coming back down, by spring of the next year. Not happening at all. Completely failed investment there, but I mean, it's completely intact. 4-year cycle to me is completely intact. And it's never easy, whether it's, the pristine top here, double top here, or just bumping along the curve for an extended cycle here with the ETFs. I mean, I'll pull up the Stephen Perno, see if he updated his cycle theory. Sorry for the dead time. I keep kind of scrolling farther back. Here it is. Here it is. All right, so this is the theory, the latest theory about where as he calls it, primary resonances and all half harmonics. So again, it has to do with log time. And actually, no, this is not log time. This is not log time. This is linear time, log residuals from the power trend. And you really put a lot of credence into this top, which is here. I haven't analyzed it myself, but I just don't know. But basically, the point is, this is 2027. So you extend this, you get from 2.5 to 5. Why you don't go from 5 to 10, I don't know, but you don't. You go to like 8.5, and then you go to here. I haven't studied it enough, to be honest, but anyway, you sort of line the peaks up, you line up these times, and this is his theory that it could happen, a big boom in 2027, which would be great. I mean, it would be great, but I have no idea if it's valid. Just have to see. Good morning, Hugh. Thank you for joining. The other one, which still gets me, I'll show you guys. I show you almost every day for this one as well, but the network revenue is very poor this cycle, right, relative to any sort of a trend. So actually plotting this out as a trend, even on a linear scale, could be interesting. So, right, this old chart, right? So this is what miners make on the subsidy or the new coins, which are the vast majority of their revenue, plus fees, rolled over the course of a year based on price every day. Okay, so you usually top like a year after the top. So we went from $1 billion in 2014 to 7 billion, right? So 7x, something like that, in 2018 to 17 billion, 2.5x in 2022. This topped actually quicker because of the double top here. And then we haven't even hit a new high, which to me is wild. And I actually thought this was arguing for, to me, this was the best argument the cycle was over. And that we'd be on some new trend here. But again, for those that argue, and there might even be some power law people here, that people that argue that the halving is not important anymore, I would not agree. I mean, you can measure, look at how important that halving was. It was, revenue was revenue was rocketing up here, and then it was sawed off here for a year. Even retraced and then went up again. And the same thing happened here. Same thing happened here. Not as extreme here, it just sort of stayed flat. So this dynamic is interesting and probably plays to the cycle itself. But I haven't figured it out yet, what it means, like for this one. You know, do we just go through a cycle here with like not record revenue? It's kind of weak. Maybe we do. Maybe we go all the way back down until the next halving and make up for it, you know, the next cycle. I don't know. But the miners are roughly making the same over the course of a year that they were making 4 years ago. Another thing, again, you could argue that this crypto winter, which again, that's, remember I was talking about the low in the prediction of today's price, which the lowest ever was painted in like May 2016. Back here. Or was it 2017? Too many numbers, guys. I always forget. Let's just answer the question for you. It was 2017, wasn't it? It was 2017, May 2017. So 123,000 was the projection for today, February 17th, 2026, all the way back in May 2017, which was an all-time low. So, point is, it's not true always that generally the power curve has gone down, the projections, but it's not an all-time low, so it's a good thing. But if you look at this deep discount, like way below the curve, this was, you know, this was technically the roughest time for Bitcoin, was what they called that crypto winter. Technically. But then we made up for it with a huge boom here, another a big boom here. So maybe the fact that we've had such a weak or, you know, on trend performance for the last 2 years means we'll have another long, deep discounted here, and then maybe we get out of it quicker, like Steven shows, and we rocket up in 2027, or we just keep on the 4-year cycle and we have a long discounted winter here and then a high next high, or we have a just, this is spur of consciousness thinking right now, but or we just keep having a kind of mediocre, since we didn't have a huge boom the last 2 years, we won't have a huge drop, although we are technically pretty low right now. But maybe we bump back to the, I don't know, the 50th percentile and stay there for another 2 years. Obviously, your guys' guess is as good as mine, but the key is that the percentages are with us. Bottom line, right now we're like at the 5th percentile. And 95% of the observations should be higher or point higher as we look to the future. That's a good way to end on, I think. Because it's late here. Got some family time, guys. But look, thank you for watching. Let me know in the comments if you want to see any of the charts. All of this stuff in the next 2 months max is going to be a public-facing little chart engine, so I'm excited to bring that to you guys. Don't worry too much. Let's keep each other sane. The asset's not going anywhere. Thank you, Nishi. Appreciate it. Thank you guys for the comments, engagement. Everybody have a great Tuesday if you are in America. Have a great night if you're in Europe or farther east. Talk to you guys tomorrow.